Volatility 25, and this is the weekly time frame. An obvious bearish trend. You can see market creating lower highs and lower lows for several weeks now. This market has been in bearish trend. Now if you look at this point, this is the current price action, this green candle here, and if you look overhead, I already marked something here. This is what we call the fair value gap. This is a form of imbalance. We also have liquidity void as form of imbalance, so this one is the one we're going to be talking about here. Now we've created a low, we've been selling for a while, and from what you can see here, two bullish candles, and it kind of looked like price is about to retrace to some levels to create a lower high. Now this is my intermediate objective. This is one of the areas I'm looking at for price to come back to and to fill, and maybe sell off from there or continue back up. Now this fair value gap, I spotted it from the weekly. I'm going to narrow down to the lower time frame to see if it is worthy to trade. Here is the gap from the weekly time frame, and from what you can see, we have a major swing high here, and it's obviously a swing low here. It's very clear and pronounced here from the lower time frame, which is the daily. I want to anchor my fib tool and measure the price in respect to premium and discounts. Anchor here from my swing high to my swing low, and this is the equilibrium, which is 50% on my fib tool here, and you can see the fair value gap from that weekly time frame formed above the equilibrium in the daily time frame. So you can see this is the 4-hour time frame, and watch here the price action here. You see price seek out a high and forms a major high here, and another one here, a swing low here. This bearish candle now becomes our order block here. Price trade above this bearish candle, violating this high too, and we've traded above this high already. We trade up, come back to where the bullish order block, and from there we react, and we are trading back up. Now the objective to approach this level of 1884, because that is where the fair value gap from the weekly time frame. If you look at this price action here, you can see the same thing that has already played out. This one, from this major swing high to this major swing low, price straight back into the premium zone and trades into this fair value gap here. You can see the high of this candle to the low of this candle, and project it forward. You see price trade into the range and breaks down to continue. For your bearish trend to actually continue, price is going to trade back to some objectives and collapse and continue being bearish. So that is what I'm looking out for here. So currently this bullishness is evident in my weekly time frame and also in my daily time frame and 4 hours time frame. So before it can trade back into the zone and become bearish, I have some counter trend trade that I can run from current price level down to this. Before I become bearish, there are also several signatures and criteria I want to watch out for markets to manifest before I become bearish. For example, I want to see a low being taken out, and I want to see a change in the structure. So many things to watch out for, but basically this is the structure of the fair value gap, and in synthetic indices this pair is volatility 25. So all of these concepts, they do work. So you can see how I actually did fine-tune the concept, going to the higher time frame, picking my gaps, and navigating to the lower time frame to see every signature of price action supporting my bias, and so on and so forth. That will be pretty much it for today. Don't forget to like and subscribe to this channel and join our Telegram group for non-stop conversation, where we converse about improving ourselves as traders. And do well for yourself. Go into your chart and try to see how well all of these models work, and see if you can apply them to improve your trade qualities and to be a better trader. So until our next video, goodbye for now.